Hi everyone, this is Trading Diary number 7. Last time I said that we're going to get off the emulator and finally get into the real world. And of course, to do that, the easiest thing and the most tempting thing would be to just go to your algorithm, edit, remove this emulation box, and go for it. But I hope I'm smarter than that. Before committing to my algorithm, I decided to do some analysis to see what all of these transactions that I have here can tell me about the market and the way this algorithm actually works. So you can actually select all of these and export them to a CSV file for analysis. And I did that. And this is what the export looks like. Look at this. You know how much I love spreadsheets, analyzing them, making all the formulas, but this is just too much for now. It will take time to figure out what these are, what they mean, and how to make them digestible for analysis. That's just a bit too crazy for now. So instead of analyzing this CSV file, I decided to go with the native report system that we have here in Moontrader. So first, remember I told you that I had crazy order sizes? Well, in order to figure out how this algorithm performed, I need to probably remove the huge order sizes because they skew the actual picture. You know, if you have 100 transactions with small realistic order sizes and they're all profitable, for example, and then you increase the order size and you have one huge $50,000 transaction and it loses you like $200, for example, that's not really indicative of what the performance is. So I want like a level playing field, and right now I will sort all of these reports by order size. Yeah, like right here. And I will go on removing or unticking all of the huge orders until we get to about 100, which is a much more realistic and true to life order size. Yeah, you see, this is what I was talking about. You have this $150 profit, and then it overshadows all of the other little profits that I have here or little losses. So we're gonna get rid of that real quick. I got carried away there for a bit. Now we have selected only those transactions, only those trades where the order size was less than $100. I didn't really find a way to select or deselect multiple lines at once, so I had to do them each one by one. So let's now see what we have in terms of more realistic numbers. Overall, we got profit of about 180 fake USDTs. Now, there are a few things I want to find out before I commit to a real algorithm. First, I want to find out the side, whether the sell side or the buy side is performing better. Number two, I want to decide on the distance that I'm going to be using for my real algorithm. Number three, the order size. And number four, the selection of coins. So we'll look at how different coins were performing and maybe eliminate the most crazy ones. And also I'm going to be thinking about some filters to protect myself from some crazy activity on the market. So basically what I'm trying to do here is lower the risk for my real transactions, but at the same time not undermine the performance of the algorithm too much. And I think that's what trading, at least automated trading, is about. Get this balance. So let's see. We're looking at the sell side right now, and it gave us about 84, 85 USDTs. On the buy side, we have about 100. These are pretty much equal. I cannot say that one or the other is performing better. Let's look at the sell side, only the losses. So we've lost about 150, and for the buy side, the losses are about 73. Well, the sell side in terms of losses is performing a bit worse, but then I guess it compensates with the profits that it gives us. So let's look sell side profits, 234, buy side profits, 173. So this does not give me any reason to include or exclude the sell side or the buy side. So I'm going to be using both of them. Now, as for the distance, mostly my algorithm were at the distance of 0.6 or 0.5%. To be a bit on the safer side, I'm going to use 0.6 for my real algorithm. Next, the order size. Well, first, before we decide on the order size, we have to talk about the selection of coins, so let's go there first. My idea was to try and figure out in these reports which coins really underperformed. And for that, we have a handy tool here. It's called Trading Performance. Let's refresh that. And here it shows you different stats. This is global per coin. Then you have per algorithm. And then you have even a deeper dive, so the combination of coin and algorithm. But right here, I couldn't find a way to exclude those crazy order sizes right here. So we're looking at everything. So let's sort by all-time P&L, and let's take a look at the worst performance. So here we have a coin, ACH, and globally, it lost me 23 USDT. But I don't know whether this is only on small transactions, only on big transactions, or a combination of all of them. So luckily, we can filter the reports by coin. So if we were to go here and type ACH USDT, we get all transactions on ACH. We need to unfilter the profits and the side. Here, now we have all of them. So you see this one is deselected because it was on a huge order size, and it got us minus 25 USDT. And that's exactly what I was talking about before. It overshadowed all the remaining performance with decent order sizes. So this is not really indicative right here that ACH with this particular algorithm on this market is a bad coin. We'll leave that in. The next underperforming coin is RDNT. It gave us minus 14. So let's do the same thing for this one. Reports and filter RDNT USDT. What do we have here? Again, this underperformance was due to this one loss with a big order size of over 4,000. So again, this is not a reason to eliminate it at this time. And I guess this will be true for many of them. Let's look at it on the other hand. Let's look at the top performance and see whether this is illusory or more or less real. So the top performer here is Lena, and it gave us a whopping 384 USDT. So let's filter the reports for this coin. All right, here, yeah, this is the 161 profit, not really indicative of the real performance. if we look at only the selected ones where the order sizes were reasonable, we have a total of 57, which is quite good, but it's nowhere near 380. So based on this trading performance tab, I cannot immediately eliminate any coins. So we'll keep that. We'll keep all of these coins. However, there is one group of coins that I want to eliminate. For that, we have to go to the Management tab. Go here, and here you have a list of all coins traded on Binance Futures on the USDT margin contracts. Here, let's take a look. There are a total of how many? 185 of them. And you have here what I'm going to be looking at, leverage and margin type. So a leverage probably deserves an explanation in itself, but I will try to give you the basics here. So the way I look at leverage is like grade in school or like credit scores with a bank. The bigger the leverage, the more trust the exchange has in this coin, but it also might mean that this coin is very stable and it's less prone to volatility. Let's look at Bitcoin. It is the most trusted coin here with leverage of 125. It just means that whatever money you have and you want to trade Bitcoin, the exchange gives you the opportunity to trade 125 times bigger order sizes than the margin, the real money that you actually have. So these are good, stable performers, but they are not really fun. You look at this top performer, the Bitcoin right here. Its volatility is approaching zero at this point in time. So you wouldn't expect huge shots here. Well, this looks like a shot. Let's look at its size. 0.5%. That's not a good distance for shot trading, for shots algorithm. So yeah, these you probably don't want to trade on with shots algorithms. On the other end of the spectrum, we have these guys. Well, let's see, we have to first update the leverage for all of them. You can do it here. Let's set it to max, just to make sure that we have the most recent data. Well, something happened. Let's sort by leverage again. Where is one coin? I think I saw one with leverage of 15. Now it's not here. So maybe it moved up, maybe it was delisted. I don't know what's going on. Okay, so here we have two coins with a leverage of 10. It means that the exchange does not want to give you more money, much more money than in the case of Bitcoin. So these have quite poor grades, and it probably means that they are not quote-unquote trustworthy. And they might go crazy and berserk at any given time. They may be susceptible to market manipulation, or they have been manipulated recently, like the Lina that I've shown you before. Yeah, this one right here. Just recently, it was downgraded in leverage, I think. Let's check this out. Lina. Yeah, it's now at leverage 20, but when these transactions were happening, it was at leverage 25. I'm still trying to decide what exactly that means, but in general terms, it's loss of trust and trying to protect this coin from market manipulation. So back to our leverages right here. So I think I will be removing the least trustworthy coins, the least predictable ones. So these would be AMB and STMX in my real trading. In the emulator, you can try and see how they behave. But since I want my emulator to be an exact clone of the real algorithm, I will be blocking these, blacklisting these on both. Now, if you look at these mid-tier coins with 20 leverage and 25 leverage, these can go either way. So they are prone to volatility as well, but not as much as the 10 leveraged ones. And the 50 leverage is considered to be more or less stable. See, the real orders that I have right now, they are all on 50 and above leveraged coins. And they are so stable that I'm not really getting any real trades. That's why I'm moving to exploring the active markets algorithm, because these guys are not too active. Another thing we have to talk about is margin type and taking care of newly listed coins when you're doing active markets. So here, let's deselect this and filter by margin type. You can see there are two options, cross or isolated. This also deserves a separate video in itself, but isolated margins basically means that in any open position, you have a certain margin frozen from your real money. And that and only that is what you risk if that trade actually fails and gives you a loss. You do not risk any of your other funds, only those that are currently in the active trade. But with cross, it's a bit different, and if you're not careful, you can lose more and more of your deposit. So here, your margin for the trade is isolated, and here, not so much. I still have to figure out all of the details, but for now, to be safe, I use isolated margin for everything. So these here that are cross now, they have been recently listed. So Combo has been around for a couple of days, Key a bit more than that, but I have to isolate their margin. And just to be double sure, I'm gonna select all and go for isolated. Here we are. So if you're running an active markets algorithm, newly listed coins will be automatically considered for trading by your algorithm. So if you're in the market live here, that's where the active markets algorithm is looking at, and a newly listed coin becomes very active, you start trading it. But when they are listed, they tend to be quite crazy at first. So maybe we would like to blacklist some of them or not. We'll see. I haven't made up my mind about that yet. But we have to follow the news about new listings, because, you know, trading on a listing, I don't really know much about it yet, but I think it's a completely different can of worms as compared to our regular shots trading. So we'll keep track of new listings and make sure we, for at least the first couple of days or maybe weeks, blacklisted, because it might go crazy and we might lose a bunch of our deposit on these crazy trades. All right, so we've discussed the side, the distance, the order size. Well, not so much order size because, yeah, I've talked about margin. Now, let's talk about order size. So in my emulator, I had about 100 USDTs as the order size. And for example, with 100, when you trade a coin with leverage 20, you have $5 of your real margin in that trade. So 100 divided by 20 is 5. That's how much real margin you have here. If you're on the 25 margined coin, let's find one. Yeah, like this one. You have 100 divided by 25, $4 of your real money in there. And that's theoretically the full risk exposure that you have per trade in this coin with that order size. But I'm not really sure how the real algorithm is going to behave, so I think I'll go with 30 USDT as the order size. And if you go really lower, you might hit the limit of the minimum order size on the exchange. So $30 I think would be fine. On a 20 leveraged coin, that would be a maximum risk of 1.5 USDT and some fees on top of that. I think that is acceptable. So I'll run it with 30 USDT as the order size first, see how it behaves, and then decide on whether to increase the order size if all goes well, or to change something in the algorithm if it turns out to be a disaster. Another thing that I want to talk about is filtering. For the last couple of weeks, we've had a pretty flat market, and all of these results that I have here in my reports are more or less on the flat market. The coins are not going all too crazy, and it performs okay, on emulator at least. But when Bitcoin starts going crazy, the distance of 0.6% might be extremely risky and unreasonable. So what I'm going to do is to limit my algorithm to a pretty flat Bitcoin. I'll decide a bit later what exactly this filter is going to be, but I'm thinking like preventing the trading from happening if Bitcoin is, let's say, 5 minutes absolute delta over 0.5%. So to me, that means that something starts happening, and at first I would like to get out of trading on these most active coins. Because I think it's gonna be like a bridge. When cars go on the bridge, the amplitude of its vibrations is increasing. So I guess this could be a nice parallel to the coins. When the basis, which is the Bitcoin, starts to fluctuate, all the other coins that are really susceptible to fluctuation will get even more fluctuate. Jesus, they will get even more crazy. So we'll cut that off. And one more thing is right here, which is an auto stop filter. So you can add this filter. It would check your balance, and if you lose a certain amount of real money, it will stop all algorithms. That probably means that your algorithms are not producing profits. So this is sort of a global stop loss. If, for example, you lose, 5 USDT overall, compared to the original balance right here, where is it? Well, there should be a baseline somewhere. I think it takes the current balance. Yeah, so if you lose, for example, 5 USDT from this amount, then it stops all trading and lets you review what happened and try and make some adjustments. So we'll use an auto stop filter as well. So I think the things that I've talked about are quite reasonable, at least for me. So this is the theory, and in the next video we'll go about actually building an algorithm that takes into account what I've discussed so far. And for that, I will see you next time.